Imagine sitting in a quiet New York library in 1973 with a young William Bernstein as he pores over dusty market charts. The numbers twitch like a heartbeat. Can you catch it? This isn't just history, it's the pulse of investing itself. What if mastering this rhythm could save you from bad advice, costly mistakes, and endless financial guesswork? Stick around because Bernstein's 4 pillars don't just lean on theory. They reveal how to build a fortress out of your portfolio. It sounds dull, but Bernstein's dive into market history is a gold mine. Why track stock crashes from 1929 or the tech wreck of 2000? Because the past is a brutal teacher, and ignoring it is where investors tank. Bernstein recounts the 1929 Wall Street crash, where stocks plunged nearly 90%. Investors didn't just lose money, they lost their minds, jumping out as markets hit bottom. But within 25 years, the Dow tripled its value. This roller coaster wasn't luck, but history repeating itself, and ignoring it cost millions. Think of markets like seasons, not clocks. Unlike clocks that tick predictably, markets cycle through growth and recession unpredictably, like harsh winters followed by spring blooms. Expect surprises, not timers. This mindset protects you from chasing false certainties and panicking every downturn. The payoff? The investors who weathered storms without selling didn't just survive. They thrived. Bernstein shows that embracing market cycles, rather than fighting them, transforms your portfolio into a patient beast that grows quietly but powerfully over decades. Risk scares most investors. Bernstein argues that understanding risk isn't gambling, it's managing a spaceship. How do you safely navigate a universe that's fundamentally unpredictable without losing control? Bernstein shares an exercise asking investors how much portfolio drop they'd stomach before selling. 10%? 30%? This isn't a quiz, it's your emotional blueprint. John, a banker, thought he'd handle a 20% drop until he panicked at 12%. Knowing this up front stops you from selling right before rebounds. Imagine risk and reward as dance partners. If reward leads, risk follows safely. But if risk leads, you'll likely stumble. Bernstein explains that more risk can mean more return, but only if you keep rhythm. Blindly chasing high returns is like grabbing the wrong dance steps and falling hard. Diversification is like building a trampoline under your tightrope walk. By spreading investments, stocks across countries, bonds, real estate, you soften falls and reduce the chance of catastrophic losses. Bernstein shows this safety net isn't optional. It's investing 101. Here's where most investors get wrecked, their own brains. Bernstein pulls back the curtain on cognitive biases that turn rational investors into jittery gamblers. Can you outsmart your own mind? Bernstein paints a vivid scene. During the dot-com bubble, smart people bought insane valuations purely out of fear of missing out. Suddenly, greed drowned logic and many lost their shirts when the bubble burst. Recognizing these emotional hijacks can keep you in the game long-term. Imagine you're in a crowded theater watching a fire alarm pull. Everyone rushes right, but you notice an exit left, safer and faster. That's the herd effect in investing, people chasing popular trends rather than thinking independently. Bernstein says ignoring the herd is the hardest but richest path. Complex investing products look shiny, but they're often traps. Bernstein shows how simple, low-cost index funds outperform dazzling strategies consistently. When your own mind plays tricks, simplicity becomes your anchor and protector, not complexity. Remember that dim New York library where Bernstein first saw the market's pulse? Now you know that investing isn't about picking winners. It's about mastering 4 pillars: history, risk, psychology, and portfolio construction. Next time you feel jittery or overwhelmed, pause, breathe, and ask, am I leaning on these pillars or just chasing shadows? Try this. Write down your risk tolerance honestly today and build your approach around it. It's your clearest compass. Subscribe for more book summaries like this one.